Hello, this is Professor Azir again. Excuse me. And this is the second of the videos on preparing a master budget. Let's go back to the sheet. In the first two videos, in the first video, I gave you the data for the example, and I also made two budgets for the example. First one was our sales budget. We have two products, drills and saws. And the second one was the production budget. This is the number of final units that I'm going to end up producing. In this video, I'm going to produce the second and second and third of the two budgets. First budget is the purchases budget. Purchases budget computes the quantity of direct materials that are going to go into each type of final product drills or saws. And the manufacturing cost budget is going to compute the total manufacturing costs that are going to go into each of the two products. Okay, so let's go ahead and start with the purchases budget. I'm going to get right into those. Okay, and you're going to see that for the purchases budget, we're just going to compute the purchases, the total purchases that we're going to need for all the direct materials: metal, plastic, and handles. And then we'll come to total purchases. And then in the budget for manufacturing costs, we're going to compute the total manufacturing costs of all types, including direct material, labor, and variable manufacturing overhead. So let's go ahead and start. You're going to notice the logic for these is the same. We start by asking ourselves, for each type of product, how many final units do we have to produce? Okay, now that comes in from the production budget. So we know we're going to produce 65,000 units of saws and 42,000 units of drills. Now, then we ask ourselves, if we have to make those numbers of final units, how many pounds of metal, we're computing first the metal, then we'll do the plastics, go into each one of these. Well, we know that 5 pounds of metal go into each saw, and we know that 4 pounds of metal right here go into each saw. Okay, so we're going to take saws. If we take saws times the pounds of metal going, we know that 325,000 pounds of metal are going to go in to make the 65,000 saws, and we know that 168,000 pounds of metal are going to go into making the drills. Now, I'm going to use this final column as a total column, which means that we're going to need a total of, for our production needs, of 493,000 pounds of metal. That, of course, assumes that each type of metal, that each product uses the same type of metal. Okay, now, companies always have a desired ending inventory. Even if you have just in time, you want at least a little bit of inventory in your final warehouse. Okay, and those numbers come from the data that I initially showed. Okay, so if you go here, your desired ending inventory for metal is 36,000 pounds, and we're going to put that over here in the total column, because we're just dealing, this whole calculation is to ask ourselves, how many total pounds of metal first do we need for production, then do we want our desired ending inventory, and then now the total of these two, and I'll put a subtotal here, the total of those two, that's our total metal needs. Those are the total needs that we're going to have for metal. We're going to need 493,000 for production and 36,000 to meet our desired inventory. If we take out what we already have on hand, our beginning inventory of metal, and your beginning inventory of metal is 32,000 pounds of metal. There it is right there. We take that out. That's going to give us, adding those together, taking the 529 and basically subtracting out 32,000. That's going to give us the total pounds of metal that we're going to have to buy. And then from our cost sheets over here, we know that, and you can take it almost from any one of these, that either that 8 or that 8, that each pound of metal costs $8. So our total metal purchases in monetary terms are going to come to $3,976,000. Okay, now the plastic purchases budget is going to be virtually the same. Okay, we're going to start with our production of final units. It's going to be the same logic, just we're going to use the same basic final units. Okay, the number of pounds of plastic that go into each one of these things. So you look over here, plastic. You know that 3 pounds of plastic go into each one of the saws. And for the drills, each one of the drills, excuse me, that's the drills. And then for the saws, it looks like it's also 3 pounds of plastic. Okay, so our total plastic needs are going to be, for the drills, it's going to be 65,000 times 3, gives you 195,000 pounds of plastic. And then 42,000 times 3, that's going to give us a total of 126,000 pounds of plastic. So for both products, we are going to need 321,000 pounds of plastic. Now we have to add in our desired inventory here, and our desired inventory comes from there's that number right there. 32,000 is our desired inventory, 32,000 pounds. So our total plastic needs is to cover both the production and our desired inventory. Ending inventory is 32,000. If we subtract out our beginning inventory of plastic, which should be 29,000, I believe. There's our beginning inventory of plastic. That's going to give us total production needs of, total purchases of 324,000. If we multiply that times the cost per pound, you can go to the standard cost cards here. The cost per pound of plastic is $5. You can look at, it's either one of these numbers, that number, or that number. So let's make sure we got that here. The cost per pound of plastic is equal to $5. It's either number. Okay, we'll get our total, the total that we're going to need to pay for plastic for our products. That's 324 times 5. That gives you $1,620,000. So far, for both products, we're going to have to purchase metal for close to $4 million, and we're going to have to purchase close to about $1.6 million for plastic in order to make our final products and to meet our desired ending inventory. Okay, and then finally handles. Now keep in mind, remember that if I recall here, handles only went into, which one of these two products? Handles only go into drills, so we don't have to worry about, we already know that there's only one handle per drill. That's going to make our life easy. There's no handles per saws here. Okay, so for handles, we know it's all drills, so that we know that our total production need, go see which column is which. Okay, so it's going to be the second column. Our total production needs are going to be, I'm just going to put it right here, our 65,000 for the handle production. Just a minute. I want to make sure of this. the handles only go into drills. Okay, and this should be drills. Saws, sorry for the mistake. Okay, so our handles only go into drills. So we're going to make 65,000 drills. Okay, there's only one handle for each one. We know that. So our total production needs are going to be 65,000 times 1, which is, so we're going to have to purchase 65,000 handles just to meet production needs, assuming we won't have any inventory to cover it. Our desired ending inventory for handles is, you come over here, it's the same logic as before. Our desired ending inventory for handles is 7,000 handles. Okay, so our total handle needs, so to speak, if there's such a word, is 72,000 handles. We know that our ending inventory, our beginning inventory, excuse me, for handles has 6,000 pounds. Okay, so our total we're going to have to purchase. So if we need 65,000 handles for production, we want a desired ending inventory is 7. We're going to need 72. We already have 6,000 on hand. So our purchase of handles, we're going to have to actually buy 66,000 handles. The cost per handle is over here from the inventory sheets over here. The cost per handle is $3 per handle. Okay, so our total handle purchases, 66,000 handles times 3 is equal to, I should say, is times 3. Times 3 is going to be equal to 198,000 handles. Okay, so our total purchases are going to be, this is going to be the subtotal of each one. It's going to be kind of like statement of cash flow. So we're going to have to purchase, based on our calculations, close to $4 million worth of metal. We're going to have to purchase total plastic of $1,620,000. We're going to have to purchase handles of $198,000. I'm going to go ahead and format and take those zeros out of there. That's a little confusing. So we're going to have to purchase $198,000. So our total purchases are going to be 4 million plus, are going to be about 4 million plus 1.6 million plus 198,000. So we're going to have to purchase, and once again I'm going to take the zeros out of here. We're going to have to purchase about $5.8 million worth of direct materials. Okay, now finally we're going to come over here, and these are the two most detailed budgets. And this first budget, the purchases budget, tells you the amount of direct materials that you're going to have to purchase. Some of that goes into inventory, some of it goes on the assembly line. And now this next budget mostly has to do with costs that go onto the assembly line. That's the major difference. So notice that over here in the purchases budget, in each one of these we adjusted for inventory. We adjusted for desired ending inventory, and we took out our beginning inventory, and we did that in each case. Okay, over here in our manufacturing cost budget, we're just concerned with costs that actually go onto the assembly line. So in one we were concerned with how much do we have to purchase of each, and both in quantities and dollars, of each direct material and during the period, regardless of whether or not it goes on the assembly line. Here in the manufacturing cost budget, we're only concerned with materials that have to go. We're only concerned with the costs, not just materials, but costs that go onto the assembly line. And these are all going to be, in a sense, variable costs, the way this example does it. Okay, so let's go ahead and start. And we're going to start this particular budget by once again computing the final units of production. So we have 65,000 drills, and we're going to have 42,000 saws. Each drill. This is going to be, we're computing the direct materials. That's our first type of cost, and we're going to compute the metal, the plastic, and the handles that go into production in this case. So in a sense, we're starting with the same logic here. So we're going to have 5 pounds of metal that go into each drill, 4 pounds of metal that go into each saw. Okay, and we know that the cost of, so this gives us, if we're going to take 65,000 times 5, that's going to give us $325,000 pounds of metal that go into production. Then we're going to know, then for drills, and then we're going to have 42,000 final units of saws times 4 pounds per unit. Okay, so we're going to have 168,000 pounds of metal that go into the production of saws. Okay, and we know that each pound of metal costs $8. So we come over here. We know that each pound of metal costs $8. And they use the same metal, so we can just, for each type of product, we can just go ahead and multiply it out. So we know that if we're going to put, production needs 325,000 pounds of metal at a cost of $8 for each one, we know that our metal production needs in terms of dollars for drills is going to be 2,600,000, and then we know that for saws, the metal production needs for saws in terms of dollars is going to be 1,344,000. So our total metal that is going to go into production at cost is 3,944,000. Notice that, in a sense, the difference between these two budgets is the level of inventory. So these numbers are close, but they don't consider the levels of inventories. This number is close to this number, but it doesn't consider the level of inventories. Okay, now plastic, we're going to ask ourselves what is the cost of plastic that is going to go into production? Okay, and we're going to start with the exact same. By the way, they also considering cost here. Anyway, so plastic is, we're going to use, it's going to be final production. Again, we can just take the same numbers here. And plastic is going to cost, it costs the same for each pound of plastic. You could take it from here, or you could take it over here from the direct, from the standard cost cards. For plastic, each pound of plastic this is plastic per file. This is the quantity of plastic. So it's 3 pounds. Okay, so anyway, so your final unit of production is, you're going to make 65,000 whole drills, 65,000 final saws. The amount of plastic goes into each one is 3 pounds of plastic. Okay, so 65,000 times 3 means that you're going to need 195,000 pounds of plastic for drills. You're going to need 42,000 pounds of plastic for saws. And the cost per unit of plastic, I believe, is $5 coming over here. So you come over here to the job cost card, and the cost per unit of plastic is $5. It doesn't matter which one. They use the same type of plastic in both types, apparently. Okay, so if we're going to need 195,000 pounds of plastic total that are going to go on the assembly line. Each one costs $5. So we're going to pay $975,000 for plastic that goes onto the assembly line. That's our manufacturing cost. Same logic for that first one is for drills. The same logic goes for saws. So we're going to have 126,000 times is going to give you 630,000 is the amount of plastic they're going to go into saws. Okay, so 975,000 plus 630,000. So for plastic, we're going to put on the assembly line 1,605,000. Okay, so we've got two types of direct materials. First one is metal, the next one is plastic, and the final one is handles. And handles only go into drills, and drills is the first column here. Okay, so we know that the final units of drills, we know we're going to make 65,000. Take that from anywhere. Then we're going to use one drill. I'm just going to put in one drill because, you know, one drill has one handle. That would be. Okay, so so if we take 65,000 drills times one handle per drill, it's going to give us 65,000 handles we need. We know that the cost per drill, going back over here to the standard cost cards, the cost per handle is right here. One drill is $3. Okay, so drills are going to cost us 65,000 drills times $3 per handle is 195,000. And I'm just going to put it over here in the total column. So we're going to pay $195,000 for handles that go into production. Okay, so direct materials is $3,944,000. That's what I'm saying. Direct materials, our first type of direct material, metal, we're going to put in close to $4 million of metal in production. Then we're going to add $1,605,000 of plastic that goes into production. Then we're going to put in $195,000 of handles that go in production. So our total direct materials costs that go from the storerooms into production are going to be $5,744,000. Now keep in mind that's only the first type of cost. Okay? However, we're going to also have to compute our direct labor cost to produce both drills and saws, and finally our variable manufacturing overhead. And it's just going to be the logic is going to be the same. Basically, all of them is we know we're going to produce 65,000 drills. We're going to produce 42,000 saws. Now, since this is direct labor, we have to compute the direct labor hours. We're going to need the direct labor hours that go into each one. And you just go over your standard cost, your budget cards over here. Okay, so for drills, go down here to direct labor. We're going to have 2 hours that go into each drill. And then for saws, we're going to have for direct labor, we're going to have 3 hours that go into each saw. So our direct labor hours for drills is going to be 130,000. That's hours. And I tried to put all the labels out here, by the way. And for saws, we're going to have 126,000 hours. Those are hours. Our direct labor rate for drills, apparently the direct labor rate for each one of these products is different. Our direct labor rate for drills is $12 per drill. Our direct labor rate for saws is $16 per hour. There's your cost cards. Okay, so our total expenditures, labor expenditures for drills is $1,560,000. Our total labor expenditures for saws is 126,000 saws or hours times $16 per hour. So we've got 2,016,000. So our total direct labor costs to go into production are going to be and I think I multiply that, is going to be 1.56 million plus 2,016,000. That equals 3,576,000. So those are total direct labor costs. So far we've got total direct material costs going into production, 5,744,000. Our total direct labor costs going into production are 3,576. And the final amount is we just got to calculate our variable manufacturing overhead, and we've got to calculate our fixed manufacturing overhead. Now, we know that, and I think I mentioned this, that apparently what they're doing, if you come over here to the standard cost card, is they're applying. Remember, we don't put actual overhead in the work in process because there's so many types of overhead, and that would confuse us. So we're just going to estimate the overhead. You can see that these two numbers are equal. So we're just estimating the overhead based on the number of direct labor hours. Okay, so to estimate our variable manufacturing overhead that we apply for each product, all we're going to do is take the number of labor hours, so that's equal to that, and that's equal to that. And this is the amount we're going to transfer from the manufacturing overhead account into work in process. We're going to multiply that times our variable overhead rate here. I think it's $1.50. So the variable overhead rate for both drills and saws is $1.50. Okay, so we're going to take that. That's going to be equal to $1.50. Multiply that times so 2 hours times $1.50. Just a minute here. What am I doing? I should take the total direct labor hours. I'm going to take the total direct labor hours for each one. That doesn't make sense. It's still you're applying on the basis of total direct labor hours. So total direct 130,000 total direct labor hours went into drills, 126,000 went into saws. Our rate for each one, as we had up before in the wrong row, was $1.50 for each one. So the amount of overhead that we're going to apply is for drills and saws is 195,000 plus 189,000 respectively. And finally, our fixed manufacturing overhead, we're just going to take it. They don't allocate fixed manufacturing overhead per products. Somewhere in here, I should have that fixed manufacturing overhead. And if I don't, I'll fix it in the next example. But somewhere in here, it should say that fixed manufacturing overhead is equal to $214,000. Okay, fixed manufacturing overhead. This is selling and administrative. You can see from the book, I made a mistake here. This is actually fixed. This is selling and administrative expenses. This is supposed to be selling and administrative expenses is $340,000, and I'll put 7 in here. You can see from the book that our fixed manufacturing overhead is $214,000, and of that, $156,000 is non-cash, and that's going to be part of our cash budget. And our 156,000 is non-cash. I think I made a slight mistake here. We'll just go to make number 6 here. This is supposed to be fixed manufacturing overhead. I had it right in a sense, but the number, I just put in the wrong number. Fixed MOH is 214,000, of which 156,000 are non-cash. So, and then our selling administrative is 340, of which 90,000 is depreciation. Anyway, so if we come over here, our fixed manufacturing overhead is 214,000, 214,000. So here are our costs. So these numbers, that's just a given number. Fixed manufacturing overhead is usually just given. So our total manufacturing costs are direct materials is 5 million is equal to 5,744,000. Our direct labor costs are 3,576,000. Okay, so these are all costs that go into directly into the product. Our variable manufacturing overhead, like direct labor, direct materials, and all that, or what am I saying? Our indirect labor, indirect materials, and all electricity and all that is 384,000. And our fixed manufacturing overhead, such as rent and insurance, premium on the insurance contract, is 214,000. And so our total costs that go into manufacturing are going to be 9,918,000. Okay, I think this video should help. I made a couple of little mistakes there, but I did fix them, and I think it should help in the end, especially since if I send you the worksheet. And because these examples can get rather detailed. So I'm going to put here total manufacturing cost. So total manufacturing cost. So those are total manufacturing costs. Okay, and in the final video, finishes this video. Final video is going to be short. I'm going to make a cash budget and an income statement. And one thing I'm going to try to point out is that the cash budget is what brings everything together. The cash budget begins with your cash balance and your collections on sales. But then we're going to plug in from the materials purchases budget. We're going to plug in numbers from the purchase budget. And then we're going to plug in some costs for the manufacturing from the manufacturing costs. So the cash budget kind of brings together your sales budget. You're going to notice that numbers come in from your sales budget, your purchases budget, and your manufacturing budget. So it kind of brings everything together on a cash basis only, and then it's a small step from the cash budget to the income statement. Okay, so anyway, I was a little rough here, but it's all in the book. This example is all on page 327. The circumstances are on 327, the data, and the solution is going to have the solution has all the numbers I put in here. I'll send you all that stuff in the email. Anyway, I'm going to stop here, and we'll finish in the next video our cash budget and our budget.